Hello, fellow traders everywhere. Adam Hewison here, co-founder of MarketClub with your midday market update for Monday, the 12th of March. China misses on estimates, riding in a HOG, and now Libor is under investigation. All of this, and it's just start of the week, Monday. Also, we're looking at three stocks on the move today. Harley-Davidson is one, that's the HOG, and also First Solar, that does not look good, and also Equifax, EFX. We'll see if MarketClub's trade triangle technology got the direction of these three stocks correct. But first, if you're going to be wanting to improve your trading, you may want to join us at the end of the month on the 27th to the 30th. It's MarketClub Investor Summit. It's our first summit. We're looking forward to doing this. I'll be there, of course, with some other experts. And it's just really for MarketClubs, the strategies that we use and employ to be successful in the marketplace. You can call us toll-free, 1-877-219-1482, extension 10234. If you're calling from overseas, if you're watching the show overseas, the number to call is 1-801-341-3981. That's the same extension, 10234. So give us a call. We still have a few spots left, and we'd love to have you come out and join us. I'd like to meet you personally, and we can talk about the market and discover strategies that you may not be aware of that can help you improve your trading in 2012. So let's go to the markets, and let's go to our portfolio manager. And right away, you can see the S&P now is a 65, plus 65, indicating that it is a trading range. The trend that we were seeing, first of all, and I'll show you how we do this, of course, our trade triangles are right here. You can see basically we got long on 1292. We exited that position right here on March 6th at 1340. Nice profit there. And we're sort of neutral right now for intermediate-term traders. Now, if you're a longer-term trader, you, of course, you'll still be long from this level here based on our strategies. So let's put a couple of things on the chart, one of which is going to be our Donchian trade channel, and the second which is going to be our parabolic, the PSAR. Now, parabolics are very good for stops. They help you stay in the market, and of course, they get you out of the market when it's the right time. Now, they have turned back up, so you could say you want to get back in. I would prefer to see a weekly green triangle come into place to get more excited about this market on the long side. But for the moment, you've got a plus 65 indicating a trading range. And for trading ranges, we'd like to look at our Williams %R, which is overbought right now. I'd like to see this come back down to this area, similar to this time period here, to be looking to be a buyer. You can see, right, we don't get that many opportunities to get it way down below the minus 80 level. So when we see it go there, we sort of like to see it. Also, the MACD is a little bit negative right now. So I think the market is going to go sideways to lower right now on the S&P. So let's go to our next market, and that's going to be, well, the Dow and the NASDAQ are pretty much the same, 65 and 75, and pretty much mixed bunch there. But let's take a look at silver, because that's really important that we look at some of the metals right today because of what's going on. We're plus 55 in silver, indicating a trading range. However, the market isn't acting that well. I think the 33.50 area, if we close below that level today, will be a negative, and we'll see this market test the lower end of the Donchian trade channel. Now, we do have a longer-term monthly green triangle positive on this market, but intermediate-term traders should be out of this market for the time being. And I think that's the important message to take away. You can see we were long, and we had a signal here at 32.62 to get out. The market's higher than that, of course, right now. But nonetheless, this market still looks to us to be a little bit heavy until the end of the month, maybe even early April. So again, be on the defensive on this market. There's no reason to rush in. I would say if the market were to move higher and move over the highs we are seeing here, I think that would be a very good sign. That's around about the 34.50 area right now. That's what we would be seeing this market to do. So let's go to our next market, and that's going to be, let's go back to the portfolio. Simple to do. We'll be looking at gold, and here's the gold market, minus 75. Definitely the trend is down in this market, and you can see that we're on the defensive today, trading below 1,700. The rally was obviously on Friday. We've had no real follow-through. We're back down on the defensive, and you can see we're probably going down to test the areas, the lower range of the Donchian trade channel. We're actually looking for this market to go to the 1650 area and also possibly down to as low as 1620, which is a Fibonacci retracement. So let me just take some of these off the screen to give you a better idea. And we'll, there we go. So you can see that we have had somewhat of a, let me just take this off as well. So you can see we're somewhat on the defensive here, and I think we'll see this market sort of roll over and start to head back down. Let me just put my telestrator on, as I love to do, and you'll see what I mean. So here we have the, the move up, obviously, and then we have this big engulfing line. This is a very negative signal right here. It's followed by a confirmation signal the next day right here. And of course we move down. Now we're sort of rolling over here, and I think we'll see this market come down, possibly test the 1650 area, which is right here, and then down to the 1620 area. So I think that's potentially, that's a 61.8% Fibonacci fib retracement. So we'll have to see how that works out. So that's the 1620 level, but this market should be on the defensive until the end of the week. So let's go to our next market, and that's going to be the copper market. And copper tends to reflect what's going on in the economy. And as you can see, I'm just going to put a line chart on here to give you, we've been pretty much flat this market, just on a simple, if you just eyeball this, you can see just boom and boom. We sort of just jutted around these areas. We happen to think that longer term we can see this market go higher, but right now the trade triangles are really in place to do that. We've got a mixed signal, and I think we're more of a trading range. In fact, let me just clear the screen off and look at our trade triangles for you. So putting the monthlies in, you can see plus 55 exactly in the trading range, and I would best our Williams percent R is not quite overbought. So I think for the best to be just on the sidelines in this market, let it sort itself out, consolidate, and make a move, then get involved. That's the timing is everything, and that's where the trade triangles can really help you. So let's go to our next market, and let's go to crude oil. Crude oil is actually, was under pressure today. It's rallied about $1 from the lows, and we can take a look at this on the April contract. And you can see there again, this market to us is plus 65 in a trading range. And I'm going to scope this out just a little bit further because I think that it's definitely worthwhile looking at the big picture on this market. And as we've shown you numerous times, is we have had a very large, very important, what we consider very important base right here. This base is just ginormous. And if you just draw straight across here, we sort of came back. That was the original breakout point. We pulled back to an area of support. And I think now we're looking for this market to turn back up. And we're still looking for a 120 to 125 target zone here on the April crude oil. And the reason we measure that is from the lows here, which is right around, if we scope this out further, you can say that's around about the 75 level. If we round that out to 80, and then we go up to the highs here, we round this out to the 100 level, and it's, even though it's higher, maybe 125, we'll take it from 80 to 100, that's 20. We subtract 80 from 100, and it gives you 20. Okay, the 20 you add on to the 100, so this is the breakout point here at 105. So you'll be looking at somewhere at these levels, the 120 to 125 level on crude. Now, I don't know what's going to get it there. Maybe it's going to be some problems with Israel and Iran. I don't know. But the market is holding very, very well. And today's action, I think, is probably going to be a low period for the crude oil. I think we'll start seeing this market close up and close very well for the end of the week. But let's watch this market very, very carefully. Lots of opportunities in here. It's a target-rich environment, and we really want to take advantage of it. So let's clear that off the screen. Go to our next market that we're looking at, and that's going to be the USO. This is one way to basically trade this market, and that's with using the USO. And you can see quite clearly it's very similar pattern. You can see our monthly got long at 38.47. We're currently trading at 40.47, 40.66. And I think this market is going to take out this 42 area. It could be as early as this week. But everything's to go, plus 100 on the trade triangles, meaning you should really get long this market. So let's take a look at our next market, and that's going to be the Eurodollar, and we've got the Eurodollar and the index here. So let's take a look at just the index for now, because that's the one that tracks all of the various currencies, but it's a plus 90 as opposed to a minus 90 for the Eurodollar, which is exactly on track. So it's the same pattern pretty much, and you can see here the Eurodollar is plus 90, minus 90 rather, indicating it should be going down. And if we go to the next market, you'll see that we've got a plus 90 on the index, meaning it should be going up, which is just the inverse, of course. But that's how we see it right now. Definitely want to still be friendly to the long side of this market and on the short side of the euro dollar for the time being. So let's go to our next market. And that's the Reuters Jefferies CRB Index, which is down on the defensive again. We talked about the 314, 315 areas being a good area of support. We still believe that's going to be the case. We have our plus 80 today, indicating that the trend is still positive, still trending upwards. We have seen this is why we are bullish on on inflation, if you could say bullish on inflation, but this is the double bottom right here and the pivot point right here. And this is obviously this 325 level is a key area. If we go through the 325 area on the upside, then I think we're going to see this market go significantly higher, probably to this first area of resistance, which is around the 350, 345 zone. I think that would be a very easy target for this market to reach, especially if we see crude oil at the 120, 125 area. And crude oil is a very important component in the CRB index. So let's clear the screen off again, go to our next market, and we're going to be looking at some stocks we had talked about earlier, and that is going to be looking at, first of all, Equifax. It's in the news today. We don't, we had someone questioned us on our blog about, why don't we just pick these stocks out? Well, we pick the stocks that have the biggest moves, and we want to show you the way that the trade triangles are in each of these markets. Here's the trade triangles, picking this stock up at 35.75. Market's at 44.13. Obviously some nice profits in there. That's for longer term traders. You can see we would have exited this market right here at 35.13. So you would have avoided this downdraft at 20. A lot of stress on a lot of traders when you get a lot of pressure against you. But when you use the trade triangles, you take that pressure off your shoulders. You simply go with the market. You don't try to rethink or overthink the market. You just go with the market. And 9 times out of 10, it works out very, very well. Now, you also have weekly trade triangles, which you can put in, and you can see how they work as well. But generally speaking, you've got some really nice trades lined up. The trade triangles got this right, in my opinion. Long from 35.75. It's currently trading at 34.13. Let's take a look at our next market and see what that market's doing. And that's going to be the HOG, which we're looking at right now, and we'll see how that works out. So let's just say we've got, beg your pardon, that was my phone. I should have turned it off, but here's the HOG. We got long at 40.92. Currently trading at 48, so that's almost a 20% gain in just a very short period of time, in just a couple of months. And it looks like it's going, this is new highs, certainly, and we have to go, let's see the maximum on this. Not all-time highs, but certainly new highs over the previous high right here, and it looks as though it wants to go higher. So definitely we've got this one right. I should say the trade triangles have this right. And let's just draw a line from the highs here. So, and stop it right there, and we'll see, okay? So 49 to 50 would be a 61% retracement, 61.8% retracement on the Fibonacci from the highs that we saw back here. So that could be, 50 would be a definite target zone for this market, another couple of dollars on the upside. So we'll see how that plays out, but plus 100, strong trend. We are seeing this market definitely do better. So let's close this up and go to our next market, and that's going to be First Solar. And First Solar is on the defensive, and we've been talking about this for some time, so I know you can see our monthly trade triangles got short from 132, hard to believe, 132.17. The market's trading at 25, a huge winner for us. And you scope this out, scope it in closer, you can see this is just really, you can see there's the sell signal right there. Never changed on the long term. On the intermediate term, you had some other signals, but there, the last signal here was right on this date, 37.88. The market's at $12. You've got 30% profit in this position in just literally since the 23rd of February. So it's been a great, great trade. That's what the trade triangles do for you. And that's why I'll be teaching you this program and how you can use it in your own trading. So really give us a call. If you have some time, stop by March 27th to the 30th. Market Club Investor Summit in just outside of Salt Lake City. It's you can call us toll free to find information out. If it's right for you, you don't have to come for all days. You can come just for 1 or 2 days. And you can call us at 1-877-219-1482, extension 10234. So do something good for yourself and your family. Learn how to trade the right way and invest the right way using the trade triangles and how they can help you improve your trading in the future. So this is Adam Hewison. I'll be back tomorrow at the same time, the same place. We'll be talking about the markets. Lots going on. Let's watch those energy markets and let's see how things play out. Adam Hewison for Market Club. Have a great trading day.